Good morning. Just half an hour away from the open here in Hong Kong, in Shanghai and Shenzhen. You're watching the China Show. I'm David Ingles with Rebecca Choong Wilkins.
Our top stories this morning: Asian stocks trading higher, defying those losses on Wall Street, fueled by heavy selling in tech megacaps. The yen is weaker ahead of the Bank of Japan's rate decision.
Now, Vladimir Putin declines President Trump's bid for an immediate ceasefire in Ukraine, agreeing instead to limit attacks on energy infrastructure.
Also ahead, we hear exclusively from Xiaomi's CFO after the company raised its EV sales target and posted bumper earnings.
And another exclusive, we speak to the Philippine Finance Secretary Ralph Recto about the economic outlook for the country and efforts to boost investor confidence. Good morning and welcome to the show. We needed to rewrite the headlines just, I would say, in the last, 60 minutes or so, because it did seem the sort of direction of travel was really on the way down when you look at how we closed in Wall Street overnight. But as you can see, we picked up substantially. Japan is up 0.6%. You have South Korea up 1%. All in all, we're up 0.3%. S&P futures are also pushing higher as well. We'll talk more about what happened between President Trump and President Putin, and of course that interview, that followed that out of President Trump, and how he phrased really what he prefers to be the setup between Russia and China as well. The 2- and 10-year yield, we are moving into several rate decisions. Today you have Indonesia, you have Japan, and in a couple of hours after that, we go into a Fed decision, right? So just have a look at the yen, 149.63 is where we are at the moment. Right, flip the boards, but as you flip the board, just a note here in S&P futures, right? For the first time, I believe, since 2023, we did get a bearish cross where you had the 50-day moving average actually crossing below the 100-day moving average on the S&P 500, right? The declines we mentioned earlier on did permeate into the Chinese markets overnight, although to a lesser extent, as you can see. Some big moves overnight. Tencent Music was out with earnings. We'll get to, of course, the big news of the day on Xiaomi in a moment here in Alibaba, just as you can see here, down about 3.3%. Right, so the approach to the open today, A50 futures coming online. You have some of the commodity markets coming here as well. And the reason I bring this up, actually, and we are continuing, by the way, to see this divergence between aluminum prices onshore in China, where I think we're down now 5 or 6 straight days. And the opposite is true, 5 to 6 days of gains in terms of copper as well. We are looking at, I would say, mild losses. I would expect, let's see what happens, momentum would push this towards if not gains, going into the open today. Bond auction today on the 3-year, 5, 10, and 30 on the Chinese 30-year yields right now, 2.12%. Yep, so lots to watch within the bond space, Rebecca. Currency markets, but of course we're also zeroed in on a lot of these big names in the equity market today.
Yeah, that's absolutely a big sort of chunk of corporate stories that are coming through, as you say. So Tencent Music, it's an earnings story there, and expectations that the gaming side of things perhaps will provide that boost. On Xiaomi too, also earnings came through, an analyst saying that the electric vehicle business providing a lot of a boost there, and CK Hutchison in Hong Kong still very much in focus after Beijing has expressed in some sort of signals and sent signals about its displeasure over this huge Panama Canal and ports deal that it has with BlackRock. So, yeah, that's a very closely eyed one, really, for Hong Kong, but also because it's the first big Hong Kong Chinese company that is being caught in the crosshairs for US-China tensions. And, one of President Trump's real priorities, I think it came up within minutes of him taking on that administration. He made it a central issue for his administration.
Yeah, I think Marco Rubio, if I remember correctly, did go down there as well. Into Panama, right? So speaking of corporate news, right, so that's obviously one stock to track. We're getting into earnings season as well. So you have Tencent, you have Ping An reporting today, among the others, as you can see on your screens. Now, speaking of the Choong group, CK Infrastructure is set to report later today. We'll get to all of this in just a moment. Right, now let's talk more about the earnings outlook. You have Tencent, you have Xiaomi, of course, reporting some bumper numbers, in fact, even bumping up their forecast here as far as the demand for their cars are concerned. Annabelle Jewelers is our tech reporter here with us for an earnings outlook. You want to start with Tencent or Xiaomi?
No, No, we can start with Tencent.
Okay, why not? Go ahead.
This is the preview. I think the numbers for Tencent are going to be really interesting to track today. It's, of course, a business that's really been benefiting from sort of a gaming renaissance that we've seen in China. So that is going to be one of the key divisions to track today, especially because they've got the new title Delta Force. So broadly, the company is expected to report 8.7% growth in sales, and analysts as well are projecting the gross margin for the business to stick around 53% mark, which is about an 8-year high for the business. So that's sort of the gaming side of Tencent. Of course, it's also about AI and what do we get on that front, and specifically what do they signal in terms of AI spending, because I think that's really one of the interesting sort of demarcations between Chinese tech and US tech, is that US tech in the latest results, analysts and investors are getting concerned about too much spending on AI. China tech, it's a little bit different. We want to see that spending on AI, given, of course, DeepSeek and all the shockwaves that it's caused. Actually, HSBC makes the point that out of all of the Chinese tech giants within China that have already integrated DeepSeek, Tencent has gone the furthest. They've already integrated DeepSeek across their WeChat apps, for instance, abroad, but also within mainland China. So it's certainly using it within search services. But if we do get some sort of major spending push from Tencent into AI, that could also be broadly positive for the China tech complex as a whole.
And the other big one, Xiaomi, we saw them reporting their fastest revenue growth since 2021, but dig us a little deeper, I guess, into the numbers for us.
Yeah, this is interesting because I think it's sort of less about the AI and it's certainly really about the EVs. And Dave was just making the point that we had the interview with the CFO, Alain, earlier today. I spoke with him, and in the background, it was the cars that were behind him, not the phones. And it's that sort of shifting focus of how much EVs are starting to contribute to the bottom line. But I spoke with Alain, as I said, and started by asking him, the CFO, about what stood out to him about the numbers overall. Take a listen.
I think that if you look at our results last year, I think that the one interesting thing is all the areas, major areas of our business continue to grow. Obviously, we have the EV business, which is a new business that we started delivering in April of last year. And, in 9 months, we delivered over 136,000 cars. But more than that is, if you look at the smartphone side, we grew our revenue by over 20% last year, right? We gained market share. Our global market share last year was 13.8%, which is 1% higher than last year. In China especially, we grew our market share by 1.7%. And obviously, the premiumization strategy has started to work, right? If you look at our IoT business, last year was the first year that we exceeded 100 billion RMB in terms of revenue. Right. So, all in all, we put it together, you can see that. And the IoT business grew 30% as well year over year. So all in all, we've achieved very good result. As you mentioned, 35% year-over-year growth. And in fourth quarter of last year was the first quarter ever that we achieved over 100 billion RMB in terms of quarterly revenue. In terms of profit, obviously, we are focused on improving our gross margin. Our gross margin hit, 21.2% in our core business in 2024, which is similar level to 2023. And our EV gross margin was 18.5% for the entire 2024, which for a startup company in the EV business like us, I think is a remarkable achievement.
Yeah, so you just heard Alan Lam speaking there about raising the production target for this year to 350,000 vehicles. Actually, yesterday in the call, it was raised that one of the biggest challenges they face is production bottlenecks. So, of course, I wanted to ask him about plans to add further factories. Yes, they are in the works. Couldn't get too much details. And the other really interesting point is about their CapEx plans and how much they're planning to spend, and also what's the sort of divisional breakdown, because you've got the EV side. But again, you've still got to continue to make inroads into AI, and that's where they're also making gains in terms of AIoT, which is essentially all of their devices that are connected, and greater synergies between your car, between your smartphone, between your appliances, and using AI to do that as well.
Fantastic. Belle, thank you so much. Annabelle Jewelers there with that interview earlier on with the Xiaomi CFO and, of course, a preview of Tencent as well. Two stocks to watch as we go into the open today. So, in fact, just on that very note, right, so Tencent and their AI plans is one story that we're tracking right now into the open today. And really, could that further these gains we've already seen in the stock as well? On that story, you can also get a play-by-play on the upcoming earnings out of Tencent, also on your Bloomberg terminal, TLIV Go, commentary analysis from our expert editors when those earnings come out. We have a blog that will start, of course, at about that time. Keep it, of course, watch out for that. Right, going into the open today, Shanghai, Shenzhen, and here in Hong Kong. A beautiful morning here in the city. Futures are flat. The open 20 minutes away. This is the China Show.
A very good morning to you. You're watching The China Show. Now, President Trump says his administration is in active discussions with Beijing, adding that his Chinese counterpart, Xi Jinping, wants to, in his words, Trump's words, that is, get along. Let's get the very, very latest from Bloomberg senior editor Bill Ferries in Singapore. Let's begin with here on the comments. What did we hear exactly from President Trump? And does this move the needle? Is this a helpful indicator of what's to come?
Well, so President Trump saying that China's President Xi Jinping wants to get along with the U.S. This, of course, follows his announcement that he thinks Xi Jinping will be coming to Washington at some point soon, perhaps in the coming months. And in this interview, latest interview with Fox, he also said that the U.S. is not interested in having China and Russia get together or be too close. And he said both nations have a lot of resources that the U.S. is interested in. So I don't know if we're going to, how much we want to read into that, other than it's interesting that Xi Jinping and China have so far, beyond some of the tariffs, kind of avoided the focus of President Trump's gaze when it comes to his foreign policy approach so far. He's focused a lot more on things like the Ukraine war, on Panama, Greenland, things like that, on tariffs on other countries. But he's kind of left some space for productive talks, potentially, with China. And we'll just have to see whether that planned meeting in the U.S. or somewhere else actually takes place.
Yeah, Bill, I'm glad you mentioned that comment on President Trump wanting warm relations with both, but certainly not wanting both relations between those two to get warm enough. In fact, I think tone is important here. Let's play that soundbite, guys, if we can.
The first thing you learn is you don't want Russia and China to get together. It was always a natural enemy situation. They're probably friendly now, but we're going to be friendly with both. I think we're going to be friendly with both. China needs us in terms of trade very badly.
Yeah, and Bill, President Trump also mentioned, I believe, also in that same interview that they have their separate discussions ongoing with the Chinese. Do we have any idea right now, just to follow up on Rebecca's point, what those discussions are, and if we have any indication of when they probably will meet?
Well, we think those are taking place at a lower level, trying to figure out what an agenda would be for a leaders' meeting, and also the details of when they would meet, what the terms of that would be. Having President Xi Jinping go to the United States, if that's the focus from the Trump administration, is a risky bet by China. Because Trump does have a habit of putting leaders on the spot. We saw with the Irish Prime Minister just last week that Trump was very critical of him as the two men sat together. So I think the Chinese would be looking for a very structured format that they could have some control or influence of, that might limit the ability of Donald Trump to kind of freelance comments, with Xi Jinping being forced to stand right next to him.
Bill, the other big story for President Trump is, of course, the ongoing discussions around this potential ceasefire when it comes to Ukraine. We do just have some lines from Witkoff crossing the desk. So Witkoff commending Putin for all he's done to move to peace, and saying that U.S. officials will go to Saudi Arabia for more talks. But, of course, the bottom line here is that Vladimir Putin did not agree to that 30-day ceasefire. He has agreed to pull back on some attacks on infrastructure. Where do we stand now?
Yeah, I mean, going into this, the U.S. The Trump administration made very clear that their top priority was to get an immediate ceasefire for 30 days and then spend that period trying to work on a longer-term deal that would allow for a de-escalation in Ukraine. That clearly was not met. There was this agreement. There is some confusion about this agreement about whether the two sides will stop hitting energy infrastructure or energy and infrastructure. We're still waiting to get that resolved. But they did not really meet this broader agreement. They've said that talks on a broader peace will start in the Middle East, presumably Saudi Arabia, immediately, but there's also no details on that. When you look at the words that the Trump administration put out before this call and what they're saying afterwards, clearly the 30 days had been a focus, and that is one big thing that they did not get coming out of it, and we'll be following up with them and seeing what the next steps to getting some kind of a ceasefire might be.
Well, let me use that term ceasefire, and as we look ahead, hopefully to one in Ukraine, certainly we're moving far away from one in. The other story you're following here, Bill, is, of course, with Israel and Hamas. And I believe the casualty count, at least according to Hamas, is at least 404 people have been killed since those airstrikes began yesterday. Bill, what more do we know? Where are we here? And how long do you think we'll be in this situation for, based on what the Israelis are saying?
Well, based on what we're hearing from Benjamin Netanyahu and his top aides, this is not a one-off or a short-term retaliation for the breakdown in talks. They say this will continue for days. They've promised that their main war aims in terms of dismantling Hamas's political power and military capabilities remains. They said that they agreed to that ceasefire and extended it, or that truce, on the condition that hostages get released, and they said that system had broken down. So we could be in for a longer period of conflict back and forth. We don't, at this point, foresee Israeli ground troops flooding back into Gaza, but that's certainly something people are looking for. And Hamas has remained defiant as well. So it looks like between the situation in Gaza and what we've seen with the U.S. ramping up strikes against the Houthi rebels in Yemen, that we're back for a period of high tension and conflict in the Middle East.
Bill Ferries in Singapore for us, our senior editor there on all the latest across this, just multiple stories across the geopolitical front. And by the way, we'll get more on Vladimir Putin's conditions here for a ceasefire later on with the senior lecturer in political sciences at the University of Technology over in Sydney. More on that, more context certainly coming through in a moment. Going into the open today, futures are, last we checked, flat to slightly lower. This is the China Show.
Good morning. You're watching The China Show. Now, Chinese President Xi Jinping is reportedly angry about Hong Kong-based CK Hutchison's plan to sell Panama Canal ports to a US-led group. That's according to the Wall Street Journal, and it follows Bloomberg reporting that authorities in Beijing are now studying the deal for any security or antitrust violations. For more on that big story, particularly here in Hong Kong, let's bring in our China correspondent, Min Lo. I mean, tell us first just how we're seeing the saga unfold, because in some ways it's taken sort of quite a few weeks to get to this point.
Yeah, so it really started because Li Ka-shing and his company management obviously put together a really quick deal to sell off not just the Panama ports, but almost their entire fleet of ports, 43 ports in 23 countries, except the ones in China, to BlackRock Group for about $19 billion. And this was a move likely to escape the glare of Trump, which has said that China controls the Panama Canal, which is technically not true. Hutchison is a listed company. It controls 2 of the 5 ports in the Panama Canal. And then later on, Wall Street Journal now reporting that President Xi is reportedly angry because the company had not gotten any sort of consultation from Beijing beforehand. And yesterday, Bloomberg had reported that senior state leaders had been instructing certain government departments, including the market administration, for the state administration for market regulation, to scrutinize this deal and look for security breaches or antitrust violations. And reportedly, President Xi had wanted to use the Panama issue as a potential bargaining chip in broader trade negotiations with President Trump. And you can actually track all those moves and how it had impacted the stock. If you pull up that the share prices over the past 10 days, you can see the big jump in that stock after news of the deal was released. And that was because it was seen as a pretty luxurious exit, if you will, by the company at a time when it's been facing geopolitical headwinds. Can we show that stock move, please, over the past 10 days?
Yeah.
Yeah, and then later on you see that big drop on around March 13 when the first sort of negative commentary was published on a Hong Kong state-affiliated newspaper. There you can see a sharp drop around March 13. The big jump was on March 5th. And that negative commentary was also republished by the central government's Hong Kong and Macau Affairs Office, which signaled Beijing's displeasure at the company.
Yeah, okay, just to apologize as well. The name is C.K. Hutchison now, not Choong. Now, just to mention that, so realistically, what can Beijing do?
So, because this deal is taking place outside Hong Kong and China, technically there isn't really a legal basis for the government to intervene. But what they can do now is to exert political pressure. But how much sway that has on the company is also a question, because the conglomerate has, over the past many years, divested a lot of their operations in Hong Kong and China. So they now derive just 12% of their revenue from Hong Kong and China, the rest mainly from Europe, UK, Australia, and North America. So they're somewhat insulated from that political pressure. But yesterday we have the Hong Kong Chief Executive John Lee coming out, making a statement about this, saying that this matter deserves serious attention, that the deal needs to meet Hong Kong regulations. He didn't specify what sort of rules could be under consideration, but some analysts are saying that maybe if the government deems this deal as a threat to national security, maybe they can find a way to use that as a basis to shape the final outcome of that deal. But still an open question at this point, certainly something that we want to keep tracking of.
Yeah, I would imagine it's not easy within the company right now talking about this very complicated issue. But to your point, commercially, it did make commercial sense. Min Min Lo, our China correspondent. In fact, that's one of the stocks we're tracking among many others here. Tencent Music. In the early goings, massive move up in Tencent Music overnight. You had a beat in revenue there. And of course, we're waiting for Tencent itself to report later today. Right, flip the boards, please, if we can. And certainly one stock that we're also tracking here today.
Yeah, that's right. Xiaomi down just a touch, 1.1% in the early goings here. But, of course, we had this very healthy beat coming through last night. And it's an EV story here, it really helping to boost optimism.
Yeah, there we go. 1% to the downside. I mean, that being said, JP Morgan cutting the stock to neutral, and it's worth pointing out that this stock is just going to absolutely put a ceiling going into these earnings.
Some questions
today.
Over if it's price perfection, slightly overpriced perhaps.
Yeah, I think nearly quadrupled, yes. I think, since the bottom there. There we go. The open, uneventful, it seems like it. We'll see in a couple of minutes. This is The China Show.
Welcome back. You're watching The China Show. We are counting down to the open of markets, about 30 seconds and change or so off there. And really the focus today, Dave, is on earnings, Chinese earnings, because we had Tencent coming through. We have, coming through today. We have had Xiaomi coming through. These are big players on the various indexes, including the Hang Seng Index. And, of course, dominating the AI DeepSeek rally that we've seen almost be sort of unrelentless, despite some of the more negative news that's also been coming through.
Yeah, absolutely. I think when the fact that it's, the companies that are coming out with earnings today either have an AI slant or consumer slant, or in some cases really an overlap between the two. It just underscores really the importance of these numbers and how they frame that in terms of the guidance, right? So, I'll add to those names, right? As you look at the open today, you have Tencent Music overnight, Tencent, Anta Sports is coming out today, Ping An Insurance is coming out today, really as it pertains to the markets, right? So we'll see what those numbers hold. 1 and 10-year yield, Guizhou Malta is up about 0.1%. Ping An Insurance, speaking of course, coming out with with earnings. There you go. Coming online over in the onshore markets. Nothing much to tell you about as far as the index is concerned. We have been effectively hovering, consolidating, dancing sideways around the 4,000 level on the CSI 300. Where we have been sort of seeing obviously incremental gains to the upside, although not in a straight line, is a Hang Seng index that was, if not still flirting with a 25,000 level right now. So we closed at about 24.7 yesterday. We're pulling back a little bit, as you can see today. Certainly one stock to watch, and we do expect not a lot of movement, though, in the cash market itself, although you think that the warrants, for example, and the options market do suggest some big movement as far as Tencent goes there in the early going. Right, there we go. Xiaomi, not a lot there. In the open today, you did get a downgrade coming out of JP Morgan on the stock itself. CK Infra is coming out with earnings today. Massive move up in Tencent. Speaking of dancing to the upside here, 13% after a similar move in the U.S. 8 shares of Ping An. We showed you A shares earlier on. And XPeng has really been under pressure recently. You had a big drop overnight and a couple of downgrades coming through, two at least I've seen from 2 brokers going into the open today, just in the last, let's call it 30 minutes or so. Right, one stock we've been tracking, really given the ports deal and all the developments around politics, for example, is CK Hutch. There was a drop, of course. That's the Friday session following this pushback coming out of state media in China on the back of that, the deal that, the intention to close the deal, let me just phrase it that way, was announced. And we're opening about, give or take, just around the closing of yesterday. The new development there was the journal reporting that the president was angered by the fact that they did not get approval before they went ahead to talk about the deal. Anyway, complicated story. We'll get more on this a bit later on. Let's talk more about these markets. Rebecca.
Yeah, absolutely. I mean, to your point, we have seen, although it hasn't been a straight line up, but we have seen this strong momentum for indexes like the Hang Seng and so on. And a lot of that has come through, of course, that southbound support, although it has been a little bit patchy, has been a little bit uneven in the last few sessions or so. We'll dig a little bit deeper into some of those Chinese markets. For more, joining us is Asia Equities Managing Editor Lien Ting Tu. So we saw these record flows into onshore Chinese assets in February. What is driving that? And I suppose who is driving that?
Yeah, it was a really impressive set of data for February inflows. The balance of payments data basically is pointing to a very strong appetite for Chinese assets from overseas buyers. And of course, the story about China's stock doing well, fueled by DeepSeek, is pretty well known. And China's onshore market is actually severely lagging the performance of the Hong Kong listed Chinese shares. So it's no surprise that global investors wanted to pick up some value shares. What is kind of interesting to me is also potential buying into Chinese bonds as well. The bond yields have also bounced off record low levels, so that could potentially burnish the appeal for Chinese Chinese bonds. So overall, it actually points to the bigger picture that's corroborated by data points that we saw elsewhere. For example, JP Morgan, they told us last week that they processed a record amount of currency conversions into Hong Kong dollars and Chinese yuan in recent weeks, which is suggesting inflows into local shares. And we've also heard from BNY, their measurement for global institutional flows into Chinese equities also showed 3 straight weeks of inflows. So that is basically telling us that people are eager to pick up some onshore shares after a big rally in the offshore market.
Yeah, and that, to your point, the premium of A shares over H shares has shrunk substantially. And, we've been trying to figure out, Lien Ting, I'm sure you guys have been busy with too, who's buying this Chinese rally. And I think to your point of, the institutional angle, the Bank of America Fund Manager Survey really provided really good insights here, right? The pullback in U.S. equities mostly went into cash, not so much China. And I'm wondering, though, when you look at the Asia angle to that, the reduced bearishness around Chinese equities in general, how sustainable is that sort of that bullish momentum?
Yeah, you guys were just talking about earnings. I think that would be the key in order for the rally to sustain. And we've got Tencent today, of course, and that's a very important stock for China's tech sector. I believe it is one of the stocks that are the closest to reaching its previous peak, I think a few years ago. And we've got Meituan on Friday, and then a slew of Chinese banking earnings next week as well, with a 25% rally in MSCI China index already year to date. Investors basically are a bit split on where to go from here. And we've seen a lot of global funds have closed their underweight positions on China versus global indices. So for them to buy more from here will probably take a lot more positive news as well. And we heard from Amundi last night that they don't think at the rally, calling it a sustained rally is the right phrase. It's a bit of a stretch, according to them. And we also saw Bofa's Winnie Wu coming out with a note talking about a correction on the horizon. She basically is showing the history of the Hang Seng Enterprises Index big rally in 2015, and after that there was a big fall that sustained into 2016, and she was saying that this would be a history that could be mimicked this time around for the HSCEI as well.
Ben Ting, thank you so much. Ben Ting, too, our Asia Equities Managing Editor in Singapore for us there. Let's get more context on these markets between the two and everything in between. Ben Emons is with us, Chief Investment Officer at FedWatch Advisors. Ben, we'll get to the Fed and the BOJ if we could in a moment here, but just your sense of, you know, how do I need to be thinking about the equity markets? Let's call it 12% down in the NASDAQ, 21 or 31% up in terms of Hong Kong equities. What do investors need to be thinking about right now?
I think, David, it's the relative value, right? It's the valuation argument, I think, that played a big role in the mind of investors looking at, we got an over-concentrated market in the United States. We got just basically overvalued. And then we're dealing with risks of the economy suddenly coming to surface, and people getting concerned about the U.S. economy's trajectory and resilience, and start looking outside of it and saying there is actually value in other countries that, despite all the tariffs and despite the trade war and all the anxiety, let's go to markets where there's more value and there's not that growth prospect being so at risk, I guess. And I think that's what's really driving, I think, this flow, why you're seeing this movement, as you mentioned, like the fund manager survey from Bank of America almost matches the inflow that comes into these Chinese stocks in Hong Kong. So it's, I think, really telling of this repositioning, looking at the United States as a story that's not so resilient this year as it was last year.
Yeah, so the US story, that exceptionalist story, perhaps facing some quite serious risks there. And the Fed is somewhat in a bind here because they're both having to deal with the fallout of the noise, the falling sentiment about incoming tariffs. And of course, there's reciprocal tariffs that hit April 2nd, as well as the actual economic hit and the reality. So how should we be thinking about these sort of two divergent challenges that the Fed is trying to grapple with?
Yeah, I think that the Fed is indeed, like you say, in a bind. It's actually sort of lame duck by this data. I've mentioned this once because it's really about we're going to face a price shock because of the tariffs. And you can see a little bit from the import price data today, it's somewhat already coming through. People are preparing for it. And I think it's already driving up prices as a result. So the Fed cannot really cut rates at this point. It may have to move the goalpost on rate cuts further out. And as a result, it sits here looking at an economy that could weaken because of sentiment. You know, the consumer surveys really show, I think, some sort of stagflation sentiment. You know, job prospects worsening and inflation is worsening at the same time. So the Fed cannot do anything else but keep rates restrictive, which in and by itself should slow the economy, and then hopefully still get to the other end of like that inflation hopefully does go down because of really, I guess, a weak economy. And I think this is where the markets are bothered by, like, if you go that direction, yeah, the Fed put isn't there, right? It's actually the opposite. So it's a Fed that really has to stay on hold, really forced by this tariff policy at this point. Very different than 2018-19, when it actually reacted to tariff policy with rate cuts. This time it cannot.
Right. And Ben, just to your point, right? So people have moved out of U.S. equities. There's a part of that that's gone into tactical trades in EM, whether that's China or elsewhere. A ton of that, though, when you look at the survey you just cited there, was went into cash, right? The biggest cash allocation since COVID hit almost to the day 5 years ago. And I'm wondering how bad the sentiment, how bad the outlook in your view is at the moment. And do you think the Fed can say anything, not do anything, can say anything to perhaps put most of those fears behind us?
Well, they can definitely do that, David. I think that's always been the power of the Fed's message, that if they turn it into a more positively sounding message about the economy, that does actually soothe, I think, not only markets, but also consumer sentiment to an extent, because it gets published out there. People are really focused on the Fed 24-hour news cycle now, right? So it's definitely, the Fed is currently in a position to at least try to move that sentiment a little bit away from that really bearish outlook that's showing up in these surveys, by essentially soothing sort of the concerns. And about a week ago, Powell, in that speech, when he did kind of a short speech, he did actually the same thing, and the markets reacted positively to it. And obviously, as markets start to react positively, it does have also a spillover effect to consumer sentiment, because that does help, I think. So we'll see what Powell really says. I think they will reinforce a strong message about the economy. They don't want to show that there's a deterioration happening that people didn't realize, and therefore makes it only worse. At the same time, he has to acknowledge that we're dealing with the net effect that Powell says, from these tariff policies on inflation, that leaves this Fed at least on hold for some time, but also not having to raise rates. So I think it's a delicate message, but I think they can make it a positive message that could affect sentiment positively.
Ben, picking up on that theme of markets anniversaries, exactly a year ago, the BOJ ended its negative rates. We're expecting another decision today, nothing as momentous. Consensus is that, we stay at the level we are. To what extent are investors now looking really past the events of today to when it is that we do see the BOJ take action? And what are you expecting around that timing?
It's a bit of a difficult one this time, because so far we had at the BOJ the signals that they were willing to do a series of rate hikes, which is why yields in the JGBs have moved up so much, and that has strengthened the yen, something what you could expect. I think where they are now is that the effects of inflation continue to come through, but that domestic picture is changing too, because they are, let's face it, linked to the US quite strongly too. The US starts to slow, Japan will be affected by it. So I think Japan keeps that in mind. Typically, BOJ policy tends to follow the Fed policy, except for the last year or so when the BOJ had to diverge, because it had to acknowledge it had a stronger inflation outlook than it had expected. So I think they're right now standing pat, but I do think that they watch what happens with the US inflation picture, because if that continues to get worse too, the Bank of Japan, I think, will ultimately then react again to their inflation picture. So it's a pause here too. But I do think that the BOJ will ultimately raise rates again, because they still deal with more inflationary pressures coming through from the lagged effect from the currency weakness that they're now experiencing.
OK, Ben, excellent to have your insights joining us this morning. Thank you. That's Ben Emons, Chief Investment Officer of FedWatch Advisors in Los Angeles. There's plenty more ahead. You're watching The China Show. Stay with us. Good morning. You're watching The China Show. Back to one of our top stories today. Russian President Vladimir Putin spurning Donald Trump's push for a 30-day ceasefire in Ukraine. But in a call with his counterpart, Putin agreed to limit attacks on Ukrainian energy infrastructure. For more, let's bring in Olga Oleinikova, a social and political sciences senior lecturer at the University of Technology, Sydney. Let's begin with the core here, I think. Of course, we didn't get, ultimately, an agreement from Putin for this 30-day ceasefire. But what does the substance of that call tell us about the way forward here?
Hi, everyone. Thanks for having me. So the main thing which we're seeing is that it takes time to make any type of deal happen, right? So Trump said it will take 30 days or 60 days or 90 days to, get an agreement between Ukraine and Russia and come to any type of peace, but it looks it takes longer. So this calls, which we, witnessed yesterday, is one of such calls to get closer to the conditions that can satisfy Ukraine and Russia at the same time. The critical things in this, so basically what you just mentioned, the, call yesterday, it led to ceasefire, energy ceasefire, how they call it, that Russia agreed to. This is good for Zelensky. Zelensky is in on this point, of course, because Russia has been destroying with drones and with other missiles, energy infrastructure for months now. So that's a good point. Another point which, it looks like negotiations are happening at the background as well, more than in the public space, in the media space, about the territorial divide, like what is the assets division, basically, how would the Ukraine territory will look like after, any type of a ceasefire agreement or a peace deal happening. Will the territory that Russia has gained in the last year, like in this whole 3 years of war, will they stay under Russian territory, under Russian control, or will some still go back to Ukraine? So there's many points that need, clarification and need adjustments. So both sides are agreeing to those, and it has been challenging so far.
Yeah, I want to pick up on one of the points you brought up there. To what extent territory will feature into this? And I guess the question is, does Zelensky have to give up on the hope that, pre-2014 Ukraine and the borders then, becomes a realistic ask right now?
Yes. So in months, in the latest months, Zelensky was always pushing that, we need security guarantees first. Second, ideal situation, we can get, all the territory back from Russia in the same, composition as existed before 2014. And also, basically potential membership of NATO, of Ukraine in NATO, sorry. So that was three kind of main things. It looks like Zelensky is giving them up, one by one. Security guarantees, we've heard, Zelensky mentioned in some other, public appearances that he got some guarantees from Europe and US, because he was, remember, in this Oval Cabinet when he appeared, he said, he can't go into any type of deals with Russia as long as he has and sees significant guarantees, security guarantees. Now he mentions he is seeing some guarantees from the partners, then no, clear plan which is presented to public yet. Another thing was territory, so it looks like, he is giving up, with this idea of having, Ukraine as it was before. So it looks like, Russia has a very strong now hand on the battlefield. Russia is winning territories in Ukraine in a kind of a very fast speed in the last months. So Russia has a strong position here. It's hard to push Russia to, give up what it won in this 3 years. So it looks like Zelensky is going as well, into give up on his ideas, so the war can be stopped. Again, I'm optimistic. I want to be optimistic. I just see that it takes a long time to find a scenario that can work for Ukraine and can work for Russia at the same time. But I feel, I'm optimistic that we should get there, because this war and this tragedy should stop.
Olga, just to pick up on your point there about Russia's strength on the battlefield, particularly recently, what is the latest play when it comes to Zelensky's stance on U.S. military support? And, is that idea now sort of dead in the water? Is that behind us? And, you were just in Ukraine in recent weeks. Tell us, give us a sense of the mood on the ground, particularly since that decision on the pullback of U.S. military support was announced.
Yes, so I've just returned from Ukraine. I've been there for a couple of weeks. I was mainly in Kiev, in capital, and I would say this situation is very surreal there. At night you have sirens 2 times a night. It's 12 a.m. and let's say at 4 a.m. everyone doesn't sleep there, and then everyone wakes up in the morning, goes to schools, to universities, to work. So it really feels like this traffic in streets. It feels like it's a surreal, a bit of experience. So Ukrainian population has been through a lot in the last 3 years. So I feel when I was there, I talked to my friends and to relatives and to other people I know, experts in this field, they're all exhausted with this whole, war situation. They really wanted to end. I actually talked in the morning today with my friend who is in the front line in Kharkiv, and he was telling me, I asked him, what do you think about the 30-day ceasefire? Are you there optimistic? How you guys are feeling in your battalions and with other, teammates? And he said, we really don't think it will change anything. The 30 days ceasefire will just give a chance to regroup, for Russia and for Ukraine as well. So it's all linked as well to the military aid from U.S. because if Zelensky, if everything happens that U.S. stops and Europe stops giving Ukraine aid and intelligence, this thing is that if the war will start after 30 days, Ukraine wouldn't have a chance to regroup, right? So it's pretty, people are exhausted, and it should come to some kind of end because, again, Ukraine on the battlefield has not a very strong position at this stage. That's why for Zelensky as well, it's hard to push his line because he's not in the strongest position at this stage. Yeah.
Olga, thank you so much for the time and fantastic insights there. Fairly unique ones, of course, coming back from coming back from Ukraine. Olga Oleinikova, there, social and political sciences senior lecturer at the University of Technology over in Sydney. Right, plenty more ahead. This is The China Show. Right, welcome back. Consumer stocks in focus here. You have Xiaomi, of course, reporting some earnings coming through. Antisports is coming out later today. Among News up 2%. Just some breaking news to tell you about. The finance minister of Colombia has submitted his resignation. More on that and other stories coming up here on The China Show. Welcome back. You're watching The China Show. We're moving into the first 30-minute mark on these onshore markets. One market that is coming online in the next few seconds or so is Indonesia. We'll talk more about that following just the collapse in the market yesterday. They had to shut the market, some triggers coming in, and then it'll be closed slightly above the lows of the session here. So we're down about 0.4% on the CSI 300s in the Chinese onshore market. MSCI China is down about 0.6%. This is roughly the modest moves either side of zero you're seeing across the region, really. In fact, we're going into the hour as well, which might be eventful in the form of, well, you have Indonesia #1, which we talked about, and possibly we could get the BOJ coming through and that decision in the next 60 minutes or so. In fact, just on that very note, as we enter the last 30 minutes of trade here in the Japanese markets, there we go, in the morning session, to be more specific, we are getting some gains there just about across the board. Banks index is very much in focus. So we're up now, I think it's 6 or 7 straight days now. And, that, in fact, is at an 18-year high, the Topics Banks Index, while you had the broader benchmarks, failing to really retest or even get close to recent highs, right? So we're either 5 to 10% below the highs on the major benchmarks, which I guess in many ways, flip the boards, please. Have a look at JGBs. The play of the BOJ has so far been really shorting JGBs, #1, and maybe going long on the banks on the same story. 30-year yield is now 2.6%. Some upside coming through, albeit, of course, very, very modest at this point in time. Right, let's have a look at Asia ex China right now and what we're seeing there across. Well, you have some of the banks there. We've talked about that. Flip the boards, please. Asia ex China and some of these other moves we're seeing here. U.S. futures are seeing some upside right now. A little bit to the upside, 0.2 to 1%. We talked about the Nikkei and the Topics Index have both come off highs. That's worth pointing out. as well. In case you missed it, the breaking news coming through earlier on out of Colombia is the finance minister has tendered his resignation there, Diego Guevara. You can read more about that, of course, online in a post, I believe, on Twitter or X. Right. One market that we're focusing on right now, we're about a minute into the session there, is really one of the world's worst performing markets, the world's worst, in fact, major benchmark just after Thailand. And it doesn't help that you had a 4% collapse yesterday. At one point was down over 7%, I believe. We're down a half of 1% going into the opening minutes in Indonesia. And speaking of, there were rumors of, speaking of Colombia and, the rumors there of the finance minister stepping down, which he did. Indonesia, there were rumors there, but then they pushed back there and saying that the Indonesian finance minister was not stepping down. A rate decision as well coming through out of Indonesia today. Let's bring in Abhishek Vishnoy in Singapore for us to talk us through these markets. And Abhishek, I mean, this market's wild in Jakarta.
Absolutely. I mean, nobody expected this kind of reaction, but then it did. And like you rightly said, market got repriced as among the world's worst after Thailand. And if you look at valuation as well, they have contracted to where China used to be trading in about 10x of 12-month forward earnings. The price action implies that PE becomes a lead indicator for EPS. And right now, if you look at JCI, it's supposed to deliver about 35 to 40% growth in earnings over 12-month forward basis. So that earnings forecast, that earning estimate needs to be adjusted, so which opens the room for more downside. We have talked to a lot of people on the buy side, and most of them that we have been talking to, they have been underweight Indonesia. The price action was definitely a big surprise, but they have been pairing exposure there. Now, this is not to do much with the trade war risks. In fact, Indonesia alongside, the rest of ASEAN was supposed to be heaven trade as trade war risks escalated. But it seems like, the market which was in the crosshairs of, Trump's tariffs, which is China, has started sapping, flows from every other market. And it doesn't help that, markets like Indonesia have their own problems, like the rumor mongering of yesterday, like the existing president diverting funds to his priority projects and cutting expenditure elsewhere, like, a new sovereign wealth fund, which is, supposed to own SOEs, in Indonesia. This is not a good playbook. This is not a good look, and therefore market is discounting a lot of negatives. Our reporting reflects that there might be more downside. ASEAN stocks in total have gone into a correction just a few weeks ago. And Indonesia is leading the outflows in the region. I think about $1.8 billion have flown out of it. It's set for third quarter of withdrawals from foreigners in 4. It's set for multi-month withdrawals by foreigners, which is expected to continue. Because, David, if you look at the charts, if you look at the 12-month rolling flows, over a period of time, there's not much that has moved out. So, there'll be a cap on upside, and, Prabhava would really have to change the narrative, really have to convince the investors that he can actually deliver, on his better growth target than what he had promised. He had promised even better growth, GDP growth, than what Jokowi had promised. And remember, Jokowi was also not able to, deliver on 5% growth goal. So, he has really a task ahead to convince investors and foreigners to stay back.
Yeah, Abhi, that's a very good point. What we can call sort of euphemistically some of the growing pains of a younger market here that we are seeing express itself. But there also has been this whiplash expecting President Prabowo to be a continuity figure, essentially, with his predecessor and seeing something very different instead. The point you just made is that Prabowo now has a bigger challenge than his predecessor, would have to promise something bigger. But to what extent and is that promise that you just hinted at about the sort of Trump tariff relief that Indonesia is perhaps his haven for some, to what extent is that still offering some protection? Or, are the doubts that we've seen really kind of blowing right past that?
Yeah, that narrative has broken. Indonesia is not a haven. ASEAN is not a haven as far as our reporting is concerned, because fund managers are telling that, there are way better opportunities. I mean, DeepSeek has re-rated China. Now there are, some measures around consumption, some dry powder left to see how China tackles, what comes out on April 2 from Trump's table. China becomes the market to be in, and even Max 7 is correcting. So if you look at correlations from the world's biggest market, it is going down, and therefore other markets should. And if you see which is the best market right now to own, I mean the reporting is reflecting it as China. So it's sapping those flows in. So that narrative of ASEAN being haven, I think it has broken down completely. Probabo's policies, would need to change significantly, like you mentioned, for foreigners to stay back in.
Abhishek, fantastic. Thank you so much. We'll get more with Abhishek later on in case this market decides to act up again like it did yesterday. Our Asia Equity Senior Reporter there in Singapore for us. Right. Just on the BOJ, right? Could come out this hour. In fact, we've, some of our colleagues, interestingly enough, have done the math on this. So the average time that the Bank of Japan decision has come out is 11:59 local time. So that's in about 15 minutes from now. The earliest, I believe, this cycle was at 47 past the hour. And the latest, of course, goes into 12:36 p.m. this hour. But nothing is expected today.
Yes, the maths on that might be more interesting and have more variety than the numbers that we're going to see. Because the focus really isn't on the actual decision today. I think to some extent we're just seeing investors look right past that. It's all about what kind of language we're going to get in terms of when that shift might come now.
Yeah, I think some of our own Bloomberg economists sees that next hike in May. I think minority see it sometime in May to September. The majority see it past June as well. I think we're at 0.5%. And I think, to your point, right, how clear would the guidance be on the next hike? And will they push back in this massive melt-up in yields as well? I think indicative of how receptive they are so far to these market moves.
And there is this question mark over what language precisely we're going to get when it comes to tariffs and the US protectionism line. Of course, we are counting down now to the reciprocal tariffs from the US, April 2nd. It's really top of mind because, of course, there are going to be these really extreme global consequences.
Yeah, we'll see. Tia Livigo on your Bloomberg terminal, of course, for more context on this. I mean, literally, watch your fax machine because I believe the BOJ still uses fax there in some cases on the statement. But I believe they now scan the printed document and put the scanned copy on their website.
The times.
Well, proper OG, aren't they? There we go. Plenty more ahead here on shows. We're pivoting from OG to something that's a bit more new school in AI and how we're reshaping the outlook for EV software. We're joined by the CEO of Deeproute.ai, Maxwell Zhou, joins us exclusively in the next few minutes or so.
Time for autonomous vehicles has arrived, and we're looking forward to building with GM AI in all three areas. AI for manufacturing, so they can revolutionize the way they manufacture. AI for enterprise, so they can revolutionize the way they work, design cars and simulate cars, and then also AI for in the car.
Just in case you didn't know, that was Jensen Huang, the CEO of NVIDIA, speaking about assisted driving technology at the company's developer conference in California. Let's get more on what happened there on the ground and maybe some of the participants and what we're hearing as far as what the new stuff is coming out of the kitchen. Joining us exclusively from San Jose is one of the self-driving technology providers attending the NVIDIA event. Maxwell Zhou is the CEO at Deeproute.ai, a startup backed by Alibaba. Maxwell, a pleasure to have you on the show. Thank you so much for taking the time. I understand that you guys just did a presentation at the conference. Tell us how the presentation went and what you told the audience.
Yeah, the presentation is, there are so many audience today. Presentation is a lot of people having these presentations. Actually, this is our second time to do presentation in GTC. Last year's we present how the traditional autonomous driving going to end-to-end models, and this year we will further present how we combine large language models into autonomous driving. That is VLA models, and this software will be launched not just on cars. We will launch it on all the moving physical agent. That you can be robots, it can be like the small car, these radios. This is fully autonomous with AI, no longer powered by HD map. It's fully autonomous. It can go into your doors, just using the large language model. So it can reasonings, and you can see it can reasonings where I should to go. It's like a humans, just like humans. It go to your neighbors, hey, this is building 5, floor 7, it just goes. It also can have an arm. It can put the triggers over the elevators. So this is a full autonomy AI that is for the robots.
Maxwell, and I'm asking here not just on the full autonomous AI that you presented on already, but also on your other, autos-related software. What kind of demand are you seeing at GTC for your products? And I suppose what kind of potential customers are you perhaps speaking to on the ground there at GTC?
So firstly, it's the automakers. So currently, we have developed over 10 vehicle models this year. The estimation will be 200,000 vehicles integrate our solution this year. And
Maxwell, I was going to clarify that. So the projection from the company is 200,000 vehicles will be adopting your system this year. Could you just give us a sense of how many vehicles currently have your system right now?
Currently is 40,000 already. So we start mass production the 2024 August. So in the just previous 6 months, we have 40,000 vehicles. It's just selling by 2 vehicle models. So there will be 10 more vehicle models this year.
Okay, could you give us a sense what those models are, just to ask you in another way who your customers are?
Yes, the Great Wall is our customers, and also the Smart, this is backed by Genie, and the Mercedes is also our customers.
Maxwell, I want to ask also about some of your overseas expansion plans. Of course, you have that partnership with Great Wall, but I think last year, correct me if I'm wrong, you opened an operations centre, which was your first European operations centre in Germany. I believe that's your only overseas operation so far. What other markets are you targeting for overseas expansion, and what kind of timeline are you looking at? Is there anything that you're expecting to come through this year in 2025?
Yeah, for this year, so our targeting, market is not just the Europeans, it's Japan, South Korea, Europeans. And currently, we will partner with automakers. We'll do the road test in Germany this year. It's very quick. Yeah, it's roughly, it will be the Q2 this year. And we're also looking for empower the traditional automakers to make a transformation on AI-driven mobilities.
And quickly on this point about international expansion, Maxwell, I know you were in Japan earlier this year showcasing some of your software. Are you in discussions to take on any Japanese partners, any customers that you're potentially looking at there in that market?
Yes, we are still negotiating, talking with these OEMs, but it takes time. But for Germany, we surely will do the road test and working with these automakers.
Okay, understood. Could you give us a sense, because this is such a new technology, and for the layman, for people who are not too familiar with the technology and what's going on, could you give us a sense how much your system costs?
Oh yeah, currently the sensor cost is for the hardware it is $2,000. For the next generation, will be the $1,000 for the hardwares.
Okay, understood. Now, what is if you could explain this to me like I was a 5-year-old child, what is the difference between the new system you guys released and the previous version of the software? How much better is a car, or if it's beyond the car in terms of applications, how much better is the device with the new technology? What can it do that it wasn't able to previously?
Yeah, the previous technologies first is use LiDARs. That is expensive. So the next one we will remove the LiDARs. That would be lower the cost. It's pure vision only solutions. The second, so we were using the technologies from the large language models, like distill the models to fit this new SoC and new chips. So what makes the car is more like a humans. So we train the models using the data of the real humans and deploy it on the next generations. And also, we were using reinforcement learning training methods to make guarantee our car will be safe.
Okay, and I was hoping to ask you as well on one of the points you mentioned earlier on, that there is an application beyond just usage in cars. Could you tell us more about those plans, the expansion of its use?
Yeah. So our new product, so we will call it road brains. That means, so this technology is not just for the cars. So like humans, like a cyclist, like all these moving agents, we hope all the moving agents can use this AI to, it can move anywhere in the city to another places. For example, you can pick up your hamburgers from in and out and deliver it to your doors just by our address. For example, you put the address and a Google Map, and you have your door tags, and then you can deliver it. So it's purely AI-based. No longer you were do a mapping, Previously, autonomous driving, you were having a maps. Otherwise, this system don't work. This one is you can just deploy it. Just give me a name, I can find your address. This is the power of these new technologies.
Yeah, I suppose thinking about how quickly this industry is moving, advanced driver assistance systems now are being integrated, or the ambition is to integrate it across whole fleets for Chinese automakers, for some US automakers as well. The other element of that is that so far that feature has been an additional cost. The trend looks like this is going to be eventually offered at no additional cost. So what is this shift in the costing model for this particular feature, advanced driver assistance systems? How is that affecting your business?
Everything is, that's because of, the beginning of this year, BYD announcing his new strategies. And this strategies, I think, impacts all the OEM in China and this. I think it further impacts all the OEM. So, and this gives us more opportunities, to have more business with OEMs, because having a highly automated autonomous driving technology that takes years, and for the company like us, we can give this automaker a jump start. They can save times, maybe 3 years times to get this AI capability ready.
Maxwell, just before we let you go. Sorry, Maxwell, sorry to cut you off. Yes, yeah. I mean, so from one sort of benefit to something that might be a bit more challenging, before we let you go, you're, of course, a software company, so you're not directly hit by some of the tariffs that are coming in that are hitting automakers, manufacturers, and so on. But, of course, you work and are enmeshed in global supply chains. You have cooperation, for example, with NVIDIA. So how are you thinking about preparing for the reciprocal tariffs that President Donald Trump is planning to impose on April 2nd?
Yeah. I think the innovation has no borders, right? It's both, China and the U.S. companies, they have the opportunities. And both, countries have many AI talents. And you will see, many famous professors, AI talents, they are also Chinese, they are also U.S. citizens. The technology has no borders.
Yeah, it's really competency and utility to your point. Maxwell, again, thank you so much for taking the time. Because of what you mentioned there, all I can think about right now is how you can get me an In-N-Out burger right now with your. I can send you my address offline, and hopefully there's an In-N-Out burger waiting for me.
26th floor.
Yes. Yeah. We'll stop there. Maxwell and Zhou, fantastic. Thank you so much. CEO of Deeproute. AI joining us out of San Jose. It's almost lunch here. While we talk about lunch, BYD, according to the FT, looking like China looks to be delaying approval for the company's build out of that Mexico plant. We're looking at shares to the upside right now. We'll get more details on this. This is according to the FT based on two of their sources, people familiar with what's going on. The Commerce Ministry has not yet given approval to BYD for that plant. Plenty more ahead. This is Bloomberg. Welcome back. You're watching The China Show. That was early, wasn't it? A couple of minutes before we were expecting the decision to come. It could have come out any time. But anyway, the BOJ's out, unchanged at 0.5%. It was a unanimous decision, 9-0. It turns out when you look at parts of the statement that FX is more likely to affect prices than ever before. I would imagine that has to do with maybe the level at which the yen has weakened too. In any case, we'll get more on this decision. The yen is holding on to losses after the BOJ has left those rates unchanged. Topics index going into the lunch break right now, picking up a little bit to the upside, 1%.
And we're just kicking off our T-Live, so you can follow along play-by-play on that BOJ decision just there on your terminal. T-Live, go.
Okay, welcome back. Just to recap the breaking news from the BOJ, unchanged on rates, 0.5%, still on the overnight call rates, unanimous decision 9-0. And a couple of more things coming out. The CPI, less fresh food, so the core will remain in a range of 3.5%, or has remained in a range of 3.5% recently. This is important too, that they have observed this virtuous cycle of wages and prices intensifying. And it looks to be like while they are on hold right now, we might get a little bit more drama and context when that briefing begins and the BOJ governor takes some questions from the press. Takes place in about 4 hours from now.
Yeah,
Anything you've seen so far?
I mean, there's going to be, of course, questions about tariffs and this big shift by the U.S. for a more protectionist move. We have reciprocal tariffs coming in. That's still a big question mark. There isn't, as far as I can say, quick scan, there is not really any detail on that coming through in that statement.
There we go. So we'll leave that there for now. In terms of market reaction, a little bit to the upside on the Japanese currency, not a lot. And it's really come at a fairly inconvenient time with the cash market just going into the lunch break right now. You can still trade this, of course, when you look at futures. But in any case, this is how we ended the morning session. The 10-year yield is at 1.14%. And do we have the banks as well there in the yield story? I think we have that. Do we have that? No, we don't. Anyway, we will later on. In the meantime, though, we'll take it straight now from Tokyo, and we'll take you right down the Asia Pacific to the Philippines, where InvestPH 2025 is the first investor conference in the country, focusing on the capital market in Southeast Asia and the Southeast Asian economy. HSBC Philippines is hosting the event in partnership with Bloomberg and Maybank Securities. They're covering, of course, the conference. There for us is our colleague, Haslinda Amin, on the ground. Haz.
Well, Dave, we heard from the Finance Secretary, Recto, earlier on saying that he is upbeat. The time is now. If you want to invest in the country, you have to do it now or you'll miss the boat. Let's speak to Secretary Recto, who is with me this morning. Good to have you with us.
Thank you. Thank you for having me. Welcome to Manila.
Thank you. Thank you. Great city. There's so much noise out there. In fact, we had the OECD coming out to say that it's cut its growth projection for the world to 3.1%, and that's on the back of uncertainties. Is the Philippines able to keep to its target of at least 6% growth, given what we're seeing right now?
Yeah, we're pretty confident that we will hit at least a 6% growth. The World Bank, the IMF, and many other institutions are saying that we're on track to hit the 6%. Our macroeconomic fundamentals are very good. Unemployment is down. The middle class is growing. We're investing more than 5% of GDP in infrastructure. We have elections also right now, and during elections, there's more spending. So we're pretty confident we'll hit the very least 6% this year.
At least 6%.
Yes.
The question really, can you get to higher than that? Because in my conversation with President Marcos quite some time ago, he did say that the country should be growing at 8%. Can you get there?
Well, hopefully, if we had more investments, and that's why we passed the Create More law, and equally important, I suppose, is reduction of interest rates. It would appear that because inflation has been controlled in the Philippines, and inflation today is something like 2.5%, there is room for a rate cut in our next. So we're in an easing cycle. It's a high probability that we could do a rate cut also in our next meeting.
Would you like to see that rate cut? Because we know the central bank governor rate cuts on the table for the year.
That's correct.
You're hoping to see a rate cut?
Yes, our analysis is that in the U.S. it's possible that they have a 50 to 75 basis point rate cut. In our last meeting, end of the year of last year, I remember that we were looking at a 50 to 75 basis points rate cut as well this year.
How many rate cuts would you like to see for the rest of the year? What impact would that have on the economy?
Hopefully, at the minimum 50 and probably 75%. 0.75 basis points for the year. That will help propel growth, consumption, and investments moving forward.
Can you quantify that? That will help propel growth by 1%?
By at least 0.5%. And if we could reduce it in the next 2 years by 150 basis points, probably even higher. Now, during the last decade, we were growing at an average of 6.4%, when rates were roughly at about 3.9%, 3.4 to 3.9%. So policy rates now is about 5.75%. So if we can get that down, plus more investments because we passed the Create More law, and a rationalization of our mining tax, then hopefully that we could grow up to 7% or even higher later on.
The BSP also said that
it's a very challenging global environment.
It is a challenging environment, and we're seeing a lot of volatility in currencies in particular on the back of what we're seeing in the dollar. The BSP did say that it's keeping a close eye on the currency. How concerned are you that those rate cuts will cause a weakness in your currency?
Well, so far the peso has been strong. We appreciated 1% last year. It's relatively stable. Our macro targets are between 56 to 58. The peso today is trading at 57, thereabouts. Yeah, the peso has been relatively stable. We've been in roughly the middle of the pack as far as ASEAN is concerned.
But you still...
Yes, correct. We're watching out on that.
And you're also watching the Fed, and you're also watching what it does with rates, and you're watching the dollar.
Correct, because it affects the exchange rate and inflation as well. So we're not targeting a particular exchange rate, but we're watching inflation. And like I said, today inflation rates are, I think, 2.1 for core, and headlines about 2.5% for the year. So there seems to be room for a rate cut.
The Fed, of course, out with a decision on Wednesday.
Yes.
What do you see the Fed doing, and what do you see the Fed doing for the rest of the year?
Hard to tell.
Hazard a guess.
Yeah, but they're saying that there will probably be 3 rate cuts within the year. They could do a pause, maybe tomorrow, but then I think they're on an easing cycle as well.
Let's talk about your fiscal position. In our last conversation in Davos, you did say that you're quite comfortable with where you are right now.
Yes.
Are you still, in terms of deficit, do you see that expanding, weakening?
No, we're following our fiscal framework plan. We started with a deficit of 7.2% during the pandemic. We're down to 5.7. This year we are targeting 5.2%. Next year it's going to be 4.7%, 4.2, and then in 2028 about 3.7%. So we're on that path. We surpassed our revenue targets last year. We've had the highest revenue to GDP ratio in the last 27 years. So that's very good.
So you continue to privatize assets.
Yes.
What's in the pipeline?
You have the CBK. This is the hydro power plant, electric power plant. There are a number of assets for privatization. We're opening up also for retail investors because there are many government assets that are non-performing, and it costs government to maintain them. So might as well privatize that. And you were talking about even small properties that if bought by the private sector or even individuals, then they can create more value for the economy.
So is there a way of quantifying how much that would add to your coffers?
This year we're looking at roughly 100 billion. That's in the target revenues of the Department of Finance.
You talked about how you're optimistic for 2025. What could be the headwinds?
Well, the headwinds are global growth may slow down, but like I said, 72% of our economy is domestic, it's consumption driven. So far, our BPO industry is growing. That's our service exports. Our OFW remittances continues to grow. We hope that's not affected by these headwinds as well. Tourism is improving. We had more than $10 billion last year. And there seems to be interest in investing in the Philippines. Samsung is talking to us for a possible investment of more than 50 billion pesos. They're applying under the incentives for CREATE and many more.
There are murmurings on the ground on the back of the arrest of former President Duterte. Might that affect the prospects for the country? Might that impact investor sentiment?
I don't think so, because that's nothing to do with their macroeconomic fundamentals to begin with. There was a slight reduction in the stock exchange, but very subdued. But the peso appreciated on the day that he was arrested. So it could also mean that the international community is looking at how important the rule of law to us is concerned, and that's a part of governance as well. With regard to our position on a rule-based order, international rule-based order.
How would you rate the chances of the political situation unraveling and prompting political instability in the government and in the country?
We don't see that happening.
Zero chance of that.
We have elections, as I mentioned earlier. We have a midterm election this year. It would appear to me, coming from Congress before, coming from the House, the Senate, I've had many elections in the past, prior to me being here the Secretary of Finance. And I could see that the administration will win a majority of the local government positions, 80%, I suppose. I think Congress, 80% will be also won by the administration. Same thing with the Senate, 8-4, 9-3. The survey shows that majority of the candidates of the administration are leading in the polls.
So you think that the position will be strengthened after the midterm elections?
That's correct.
I want to touch on tapping the global market, international market. I'm just wondering whether there are plans to do that. I mean, are you interested in the
Panama? There's still a balance, yes. Our financing mix this year is more or less 80% we borrow domestic, 20% foreign. We already borrowed in January, when we were in Davos, we issued a $3.2 billion and euro bonds, dollar and euros. I think our balance for the year is very small, maybe $250 to $500 million. So we've already done that. We've already front-loaded the foreign exchange that we need.
So there's nothing else that you're going to need. And what will prompt you to tap the market, whether it is the U.S., whether, panda bonds, samurai bonds?
Well, right now, it doesn't appear that, I think we've got it covered already for the year. So very minimal left. Like I said, 80% we will be borrowing domestically. We have program loans with the ODA partners. We have project loans for the infrastructure with ODA partners, so that's part of the financing mix.
Secretary Recto, we thank you so much for your time. There you have it. Philippine Finance Secretary Ralph Recto, with me, of course, here live from Manila. Dave, handing it back to you.
All right, Haz, with the food that I missed there from, of course, my old stomping grounds, please get a few meals in for me. Hutchison in there. On the ground in Manila with, of course, the Philippine Finance Secretary, Ralph Recto. Okay, lots of breaking news, in fact, as that conversation was taking place. And by the way, before I mention that, just a quick plug that you can follow more on this, of course, taking place. InvestPH, live go on your terminals. You can also find other big diary entries coming up later today and later this week. Check that out. You might have missed that as well. And I would imagine on that as well is the BOJ briefing, which is set to happen in about 3.5 hours from now. We can table that for now. We'll revisit the BOJ, I promise you, in maybe about a minute or so. But before that, though, let me just quickly go through this big stock mover now in this market, which is, there we go, BYD is now up 4% counterintuitively, but I'm sure it's, I guess, I would bet my unhealthy liver that it is connected, that this FT story that China is delaying approval for BYD to build that much-awaited plant over in Mexico. And the reason I put those two things together, that FT report actually came out and then the stock started reacting to that news so far. We'll unpack the story for you later on as well. Very quickly, let's have a look at XPeng too, since we're talking about EVs as well. There we go, 7% down to the downside on the back of some changes to from analysts here as far as the stock is concerned. Cut to hold there, bottom of your screen at Yuanta Securities. Price target, still some upside, but being adjusted lower there at that specific broker. Plenty more ahead. This is Bloomberg.
Right, good morning. We had the BOJ decision coming in 30 minutes earlier than expected, but that was pretty much the only thing that was unexpected. Rate unchanged. Let's bring in our Chief Asia FX and rate strategist, Stephen Zhou here. So no huge surprises here. We're holding at the level we are. What's next, though? What's your outlook?
Yeah, it's really an unknown event, because if you know every time when Japan announced the decision before 11 a.m., then probably there's nothing of it. Okay. But of course, it's FOMC tonight, so they don't want to shock the market before that. So of course, it's a rate hold today. But of course, for the Bank of Japan, actually, they still have to hike further because the wage growth is there, the inflation pressure is there. Because last year we were talking about wage growth of 5%, and this year I think the labor union has agreed 5.5%. So core inflation is going to be very sticky, and the Bank of Japan will have to hike further. So we agree with the Bloomberg Economics. They think they're going to hike in April and July and bring rates up to 1%, and I think that's the base case for BI as well.
Right, Stephen Zhou, thank you so much. A non-event so far. Let's wait for the briefing and what the BOJ governor says there. He might give us something more to talk about. Okay, in the meantime, though, let's stay with banks, more on the commercial side than the monetary policy one. So Bloomberg has learned that Morgan Stanley is planning to cut about 2,000 employees later this month in its first major workforce reduction under Ted Pick, the CEO. Let's bring in Matt Ingram out of Bloomberg Intelligence as well, our senior analyst, to talk us through this. Yeah, Matt, 2,000 headcount seems like a big number. Is this justified?
Yeah, g'day, David. Look, to put it in context, they've got about 80,000 employees globally, so it's 3 or 4% of their workforce. Is it harsh? Is it justified? Well, management used the rationale that they're expecting a big ramp up in deals after the Trump election, which hasn't happened. So that, combined with the fact that turnover is extraordinarily low on Wall Street, means they need to make room. They're hiring senior bankers. They need to find the space in the salary to do that. So they're cutting away some, what you might call dead wood.
The other sort of big banking corporate story that we've been following, of course, is what's happening at Citi. We've seen Citi execs taking their hit on this bonus tied to progress on its 3-year transformation. What are the big implications here?
Yeah, hey, Rebecca. Look, transformation's hard. We've talked before about HSBC. Its transformation's been going since 2010. So Citi's tied a very ambitious 3-year plan to senior management's compensation. They've put them on the hook for that. It's hugely ambitious to expect all of these regulatory issues are going to be sorted out in 3 years, but management are wearing that. And so I guess we'll see in the next 6 to 12 months whether this has rattled the cages and whether this is going to make them speed up.
Yeah, Matt, I'm wondering you brought up HSBC. I'm wondering if I could ask you something on the company. There's a story out, and I think our colleagues in the U.S. did speak with the CEO of HSBC U.S. And to the point you were making, the focus, finally, we would hope for the company is, the jewel of the crown here after the cut in investment banking. And just give us a sense, how far are we into this transformation, which, to your point, if you tie everything together, has stretched back, 14 years now?
I think it's a bit like painting your house, David. When you do the big fixing jobs, the smaller jobs become the obvious ones. It depends how much fixing they want to do at HSBC. They've still got fiefdoms they need to unwind, so they're not finished. With every new management team, you've got a new iteration, but I think there's more to come. It depends how deep they want to go as to how long it lasts.
Okay, depends how deep they want to go. Excellent to have you joining us this morning, Matt. Thank you so much. That's Bloomberg Intelligence Senior Analyst Matt Ingram there. There's plenty more ahead. You're watching The China Show. This is Bloomberg. All right, Xiaomi has posted its fastest pace of quarterly sales growth since 2021, while raising its EV sales target for this year. Vice President and CFO Alain spoke to us earlier.
I think that if you look at our results last year, I think that the one interesting thing is all the areas, major areas of our business continue to grow. Obviously, we have the EV business, which is a new business that we started delivering in April of last year. And, in 9 months, we delivered over 136,000 cars. But more than that is, if you look at the smartphone side, we grew our revenue by over 20% last year, right? We gained market share. Our global market share last year was 13.8%, which is 1% higher than last year. In China especially, we grew our market share by 1.7%. And obviously, the premiumization strategy has started to work. Right? If you look at our IoT business, last year was the first year that we exceeded 100 billion RMB in terms of revenue. Right? So, all in all, we put it together, you can see that. And the IoT business grew 30% as well year over year. So all in all, we've achieved very good result. As you mentioned, 35% year-over-year growth. And in fourth quarter of last year was the first quarter ever that we achieved over 100 billion RMB in terms of quarterly revenue. In terms of profit, obviously, we are focused on improving our gross margin. Our gross margin hit, 21.2% in our core business in 2024, which is similar level to 2023. And our EV gross margin was 18.5% for the entire 2024, which for a startup company in the EV business like us, I think is a remarkable achievement.
The numbers for the EV in particular, you only launched in April of 2024, and as you said, around 140,000 deliveries. This year, though, the target has been raised to 350,000 deliveries. So what's the strategy for having such a big increase?
You see a couple of our EVs, right? The red one being the SU7, and then the yellow one, which is something that we just launched, is our SU7 Ultra, which we are selling at a starting price of over 500,000 RMB, right? As I mentioned that, last year we've been ramping up our production. Obviously, the SU7 was a huge success in the market. I think a lot of investors, a lot of customers like it. We have a huge backlog. If you look on the app this morning, I think the average waiting time for SU7 right now is at least 30 weeks. Right, so that's a huge backlog for us that we need to deliver. In terms of how we are going to do it this year, obviously, you've seen us yesterday raising our target from 300,000 for this year to 350,000 for this year. We need to work very hard to improve our production. Right, so we are happy. We are rapidly expanding our production capacity, and also ramping up our delivering capability as well, which we are very confident that we can achieve that 350,000 target for this year.
How do you go about doing it, though? I mean, do you have plans, for instance, to add on an extra factory? What's sort of the spending or the thinking in that area? We are running one factory right now in Beijing, which is fully ramped up. We are working very hard to squeeze the extra production volume out of that factory. But at the same time, obviously, we need to continue to expand our production capabilities by adding new production sites, which we're working on very hard right now.
Right, just XPeng, one of the stocks we're tracking on this earnings front. And a couple of Tencent Music is also out with their earnings. Impressive one, as you can see with the stock price. There BYD, some breaking news this hour, of course, out at the FTN as it pertains to the plant in Mexico. Speaking of earnings coming through later, and we'll talk more about this, I guess, tomorrow when we see you again. And speaking of the show tomorrow, Ping An Insurance co-CEO Michael Guo will be joining us on shows tomorrow to help us unpack their earnings. Thank you for joining us today.